Good morning and welcome to Trading with Larry. It's Larry Benedict joined by Eric Shamilov. What is up, Eric? Good morning.
What's
Coming a
up?
little late today, so the numbers are already out, digested. We could tell people about them, but basically we're
Well, this
seeing
is our new start time, 8:45. That's when we start. We aim
I
to.
understand. I'm just saying the numbers are out. They're out. They've been digested, and this is the new start time, and it's 8:45, and we're here for 30 minutes to basically shed light on trading day, etc. And all is good. Inflation non-existent. Non-existent. Actually, it's a net. We actually have negative inflation. I don't know how. I just went to Starbucks and my price went up again. It goes up every 3 months, but somehow no inflation. Um, stuff under the hood. The bank sector is taking a hit. They've had a great run. Um, they're trying to bring them back, but you know what this is. Today they're going to lift the Nasdaq to a level that no one can even dream about.
They're
Okay,
going to lift the Nasdaq. Nasdaq's already up a full.
Nasdaq's. I'm gonna let you in on a little secret. Okay, and this is what you don't understand. Nasdaq day over day is down, not up, down. Okay, we're down on the week in Nasdaq, even though it's up 320 or 300. We're down on the week 600 yesterday. Okay, so we barely came back. Okay, even though it seems amazing and dancing and everybody's dancing to the music, Nasdaq hasn't even performed. Nasdaq before the number was up over 200, and now it's coming in and crashing. So by the time the SPOO opens, it'll be negative. I can't even begin to tell you what is going on with this algorithm because it's just off. Dude, I'm not even going to use the word off the hook. It's off the reservation. It's stupid. It's just dumb. I know somehow you're going to tell us today how we have a handle on what is going on because it makes no sense. Now Nasdaq dropped 150 off the number. S&P is barely up. It's up 20 handles. Okay? What do you think today?
Well, financials are down. I think we're going to have same thing we have every day. Lots of rotation, but in overdrive earnings season starts. You're going to, everything you complain about every day with the algorithmic rotation, that's going to be an overdrive for the next week as
Why?
the
But
earnings.
I'm asking why. You said
Because
something.
that's the hallmark of earnings. That's just what
No,
happens.
dude. You told me yesterday, and you probably don't even remember you told me this. It was probably about 5 o'clock last night when we spoke. You go, the algo's getting killed. That's literally what you told me. The algo's getting killed. That's what you told me. So I don't understand how they do what they do. And it's funny because the NASDAQ was good, 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 good. Okay. The SPOO this morning, I'll give it to you. SPOO was down 20, NASDAQ was up 190.
Here's the
Then the
Nasdaq,
SPOO
by the way.
rallied,
Since
timeout. Then the
we're
SPOO,
concentrating on charts today, I'm just going to be pulling up these charts as you're talking.
okay. Then the SPOO rallied $60 and the NASDAQ only went up 100. Dude, this is a mind-blowing algo mania. That's all we're in. Mind-blowing algo mania. Okay. And today you can press on your SPOO short, rotate into the NASDAQ, et cetera, et cetera. And it's upsetting. It's actually upsetting to watch.
So
So
Nasdaq was closed at its dead low, on the dead low yesterday. Picked it up overnight, and these green lines. These are your short-term moving averages. It blew through that on the number. We had a 40 basis point decrease in inflation month over month. Gold popped and Nasdaq popped, and it popped right to this red line. And what do you think that red line is? That is your one standard deviation up move on the Nasdaq. It hit it to the tick, and for right now, this is resistance. But
dude,
yeah,
you're making me laugh early this morning.
yeah.
You literally said on our podcast, and to me personally, you can't
Uh,
trade Nasdaq for one standard deviation. It's literally what you told me.
what do you mean?
Okay, so it hit the one, it could go up two. I mean, this thing.
So that's the question today. It hit the one. Are we
Eric,
going up two? Are we testing this trend line?
if they wanna buy it, it'll blow through that like it didn't even exist. Okay, the Nasdaq is moving. That's why you look at Nasdaq and it's only up three. And I say only, it's only up 300. It was down 700, over 700 from the high yesterday. So literally in a day where no news, no nothing, we moved 700 Nasdaq points. So 300 is a joke. No, it's not a joke. 300 is like half a move. We'll move 500 today. We do it every day. Now, that 500 might be from up 300 to down on the day, or up 300 to up 100, or up 300 to up 650, but we will move, okay? And this will not stop, okay? This is run by a computer. This is not run by a human. The funny thing is, I would have thought the Nasdaq actually would be doing a lot better, even though it's up a lot. Like you said, it's up your one standard deviation. It went down 2 standard deviations yesterday. Do you realize that the Q was down 90? Okay, that's 2%. All right, it went.
A one VAR move is 430 points right now for the Nasdaq. So just to be
Okay,
clear,
so we're not there yet. We're not even close. But
we hit that. We hit that to the upside, but we faded off that. Here's a look at the ES S&P 500. The chart looks completely different. We're barely moving in the ES. So, what do you make of this rotation?
Well, I would say that the S&P moves a third or less of the Nasdaq every day. So if you want a baby index, trade the S&P. I'm not saying it doesn't move; it does move, but a big move in S&P is 1%. We were down 60 handles yesterday, a little less than 1%. That's a decent sized move. The Nasdaq is, I'm not even going to use the word mindless, but it's insane. Like literally, the Nasdaq goes up and down 200 points on literal air. You don't agree? Literal air.
Yeah, 100%, 100%.
And the
So
thing is, like, you know what I did a little bit last night? I was watching the Korean market because it's casino. I mean, this Korean index was down 5%, up on the night, down 4%, up on the night, down 3%, up on the night. I mean, it, and Japan chugged along and was up pretty decent, you know.
let's take a
I don't
look
know.
at
I'm actually, I'm surprised that, I'm just surprised, to be honest with you, that, I mean, I'm happy because I'm a little bit short up in here, but I'm surprised that the reaction is so muted. Surprised.
Well, the day is young, but yeah, I get your point. Here's the
Oh,
cost.
this is listen. Everybody and their mother is talking about them raising rates. Okay? If you want a number coming into a meeting that's what, in 2 weeks less, okay? I don't know the day of the Fed meeting, but it's like the last week of the month, okay? This is a number that the Fed doesn't have to make any type of move. Inflation is easing, okay? I don't know if it really is, but if they raise rates, I'm sorry, into this, it would be for no reason, okay? Because they could basically say, hey, CPI, dude, we had a massive down move in CPI, okay? Massive. So they're not going to raise. The whole mantra of the market, which we believe that the market was smart enough not to price this in, right? Because we were saying there's no way they priced in the rate hike, right, for July. So the market never really priced it in, I guess, because you would think we would see a much larger type of reaction. I mean, maybe I'm wrong, but that's what I would think. I
Well, here's
mean,
the 2-year yield that I just put up, and yeah, I mean the recent trend is fully intact, even with this move in the 2-year. So we literally hit this trend to the downside on the yield and bounced off. So now the question, I think, for today is the 2-year. Does it break through this trend, and as a result, do we start getting a complete 180 on the narrative?
No, I mean, listen, I think the narrative is in place for potentially a rate hike in September, but potentially, and they're data dependent. I got to be honest with you. This is literally where the Nasdaq was before the number came out, maybe a little bit lower. Okay. It's given back the whole move off the number. It's given back. I mean, Warsh already came out. Okay. This morning. I mean, I know he's talking, I guess, later in front of the Senate, but the text is released and it's very muted, much different than I thought. And the market's crapping out. So I don't know what's going on. I'm a little bit lost, to say the least. They somehow put this move into Nasdaq overnight. Listen, I walked in, the S&P was down 15 and Nasdaq was up 190. Okay, now the S&P is green and the Nasdaq's up 300 or 280 or 3 whatever. Okay, something doesn't make sense. That's all I'm going to tell you. The Nasdaq should be doing a lot better than what it's doing, and the S&P should be doing a little bit better, but it's being weighed on by bank stocks that didn't have bad earnings. They had good earnings, but the bottom line is I think what you're seeing in bank stocks, you're going to see in tech later down the road when these companies come out with earnings and the earnings are really, really good and the stocks won't go up. JP Morgan, I mean, I'm sure it came back a little, but it was down like over $10, at 1.3%, 3.5%. So
Let's take a look at JP Morgan, actually. I was a little bit surprised. I thought Goldman would get hit more than JP Morgan, but here's JP Morgan on the reaction. Here's Goldman Sachs on the reaction. So kind of moving in opposite directions here in the AM. So already, even within the sector, you're seeing one up, one down. You're going to get a lot of that, I think, intra-market today. I want to talk about gold and silver a little bit. You're looking for a mean reversion move in gold and potentially
no,
silver?
no, 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 no,
No.
no,
Okay.
no. I am looking for gold to go lower. Obviously, today, I don't know what's it up right now. Should be up a lot, right?
Gold is up 67.
Yeah. So,
Both
it's up.
gold, the trend line since early May, the downtrend line that got tagged today, little resistance there. Silver, same thing. Hit the trend line to the upside, resistance. If you're thinking of shorting, wouldn't this be the spot for you?
Yeah, possibly. Possibly. Possibly.
I'm actually looking for the opposite. I'm looking for the breakout, and if it breaks out of this structure, I think I'm going to try to chase it.
I'm very surprised. I mean, to me, and listen, I'm a little bit short, to be upfront. I mean, but I would say I'm happy that the market didn't explode and run away yet because I'll get to make moves on the opening. Hopefully, we have half hour, but I'm surprised. I'm very surprised. I mean, this is what was holding the market back, I believe, is the fact that in the back of everybody's mind, they knew the Fed had a possibility of raising. And as of yesterday, which I thought was crazy, and I think maybe your machine is broken or something, that it had a 40% chance of a rate hike. I mean,
Yeah,
I got
let's
to think
check in
that
on
I
that.
got to think that's zero right now. Pretty
Yeah.
much.
Okay. Now we got a better quote. The rate hike odds for July 29th fell down to 15.5%.
Yeah, so that's a great trade for anyone that did it. You crushed it, and you got another 18.5% or
So this is
whatever.
basically going to zero. So the question is, As I said, does the 2 year hold up here? And if it doesn't, does it create a 180 U-turn in the narrative here?
I don't know, to be frank, I don't know what's going to happen today. Um, as far as any of that, I mean, I think if we were more wound tight for the rate hike, the market would have even a bigger upside reaction. But like you've been saying, and I believe you're correct, this was not even priced in. Not even priced in.
No.
I'm surprised the reaction is. I mean, again, I'm happy,
The market,
but
I don't believe the market has been the stock market, the gold market, the bond market has been reacting to rate expectations, but I don't think stocks at all have been trading off of that.
yeah, but Eric, let's just back out. Monday was yesterday, the first day of the week. They smoked the Nasdaq and they beat up the S&P. Not terribly, but they got it down 80 basis points and 2%, almost 1.5%. Okay. The narrative was, that they were a little afraid of this CPI number, right? That they wanted to pare back into CPI. Well, CPI came in better than anybody's wildest dream. Like if you had a dream, you might have thought down, 1/10, 2/10. I mean, this is a number
Yeah, it's a
showing
blowout. It's a
reducing
blowout.
inflation across the board. And the narrative, as you like to use the word, the narrative isn't what I thought it would be. I mean, listen, at 9:30 they could explode up the market. That I don't know what's going to happen. Okay. But literally Nasdaq's kind of at levels it was at overnight. It's weird. It's very weird to me. It's not weird to you?
Well, it's a little higher. Yeah, I look. I mean, it hit the one. It went up 400 points from the close, so it's a decent move. I agree with you. I thought it would
I'm
be.
not I'm not debating. What I'm agreeing, it's a decent move, but it's not the kind of moves we're seeing on a daily basis. Dude, every
Yeah.
single day the Nasdaq moves top to bottom 700 points.
So today you
Okay.
have news. It doesn't move much, but when there's no news on air, it moves a lot more.
Right. So like that's the weird part. You had positive news, okay, which listen, even me being as bearish as I could be, okay, which I am, okay, I'm trading market reaction, and the market reaction to this is negative, okay, from what I'm seeing. Okay. So you have you know, obviously we went up a little, but it's a negative reaction. It's barely up. It's barely up from when the number was released. It's barely up from when Warsh basically wasn't as hawkish as he generally is. Okay. So I'm surprised. I mean, I'm happy, but I'm surprised. I
Here's
mean,
TLT. There's a chart of TLT. Is there a play here to the upside at this point? Now
no,
that the odds for a July hike are basically zero.
I don't know. Where's the 10-year trading right now? I mean, how much is that off?
The 10
Probably
year,
not a lot.
let's take a look at the old 10 year. Let me
Well,
pull
what's
that.
the yield?
I'm pulling it up. Pulling it up.
I mean, it's probably back in the low 450s area. Probably. I don't know. I mean, literally, it's
Well,
still very.
here's the 10 year yield.
Well, what is it?
10 year yield is at 457.
Oh, so it's barely moved. That's interesting.
That's what I'm saying. The 2 year just bounced off of the overall the uptrend that it has established over the last month. 10 years, same thing. Now, what's interesting is the break even number. The break even inflation rate here on the bottom panel is at the dead low of the day. So the market is expecting less inflation, but the nominal yields are bouncing off the low. And let's take a look at these break evens here. I would expect the short term
Sure. I
break
mean,
even.
we only moved 5 bips
So
off
take
of.
a look. The top panel is your 2 year break even. That's at the dead low of the entire move. By the way, the 2 year break even, this is the yield on derived from tips. from the Treasury inflation protected securities. So right at the low of the stock market, this is when break-even inflation on the 2 year started to toboggan down. But on the back end of the curve for break-even, it started to pick up. So the market is kind of kicking inflation down the road, it looks like, and they're not really worried about it in the short term.
Yeah.
I don't know. I think there might be a play here on TLT. I think it's gotten crushed, and maybe the narrative is shifting a little bit here in the short term.
I'm
But
just surprised it's 9:05. We have another 10 minutes. I want to get to questions. Also, I want to remind everyone to hit like and subscribe to the YouTube channel. I don't know if anybody's written in anything today, but we can answer any questions if there are any.
yeah, we'll get to those. So if you guys have questions, write them in. In the meantime, let's get to the how the option market is looking and overlay some of these levels on that ES chart. So here's our ES chart. We have a 38-point straddle.
It's rocking and rolling today there, Eric. It went up 8 points from yesterday. And
so
And as they say, as an umpire says, when you slide into a base, safe. Do not touch these things. Yesterday would have been a max loss. Okay. Pretty much. Okay. The SPOO went down over 65 from when we were on the show. The straddle was only pricing 30.
30. It was 35, I think, or 30. Yeah.
Well, I have a question that came in. Are the markets broadening out here? What's your thought on that?
Broadening out meaning what? The advanced decline line is rising?
Yeah, just getting to where we may break out. We discussed, what's very interesting, and we discussed this. The all-time closing high on the S&P cash is like 76.03. Okay. We're literally like 30, 40 points from there. I mean, it's getting ridiculous. So I mean, I see a little broadening out, but not a lot. And a lot of the reason for that is what I'm saying to you is that every day is an algorithmic mess. Today they're going to leave the Dow because JP Morgan and a number of these things are in the Dow, okay? And they're going to take the Nasdaq and jam it, and then they'll bring the S&P along for a little ride, and then they'll rip-diddy dip and move around like that. So
well, I could see from this chart that this is going to be exactly what you're saying, because these red lines that I just tagged on here, these are your implied straddle levels, 38 points from current price. So
yeah, but I want people to understand this.
Yeah, let's walk him through it.
And yeah, well, listen, it's all good till it's not, okay? And the bottom line is, you're looking at those as like resistance level, and I'm looking at them.
I'm not looking at those as resistance.
I'm just saying, I look at that stuff, Eric, as a face ripper. If we get up 40, we're going to go up 60 because everybody is short those options. So that's why I kind of stay away from that.
But don't you find it interesting how on the reaction, like both sides of these levels were tagged? And it's like to the tick exactly.
I don't. We haven't even started the trading day. It's 9:10.
And already both sides of the straddle were tagged. So this is to me, this is like evidence.
I don't think the downside of the straddle was tagged, but okay.
Well, it was tagged overnight. Yeah, but the upside was tagged.
Whatever.
Upside
anyway, we got more questions. Okay. This is for you. Could there be a rug pull today?
Could there? I don't think we're going to have a rug pull today. I mean, I would watch rates. I would say as long as rates hold steady or fall from here, there's going to be no rug pull, because I think there's a lot of potential for the market or some participants in the market starting to say, "Oh, well, we thought the news was going to be bad."
Well, what's funny though?
We're going to get a rate hike, and it appears we're not. in the short
You're
term.
not as negative as you were yesterday or the day before because you're a little bit Johnny Price. But I've been saying this, and I truly believe this. Like we're pulling back, pulling back, pulling back, or whatever we've been doing, which is really not a lot of a lot. Okay, um, and we're 35 basis points from an all-time high in S&P. So, I mean, as bad as things are, as freaked out as everything is, unfortunately, with seasonality, a true expiration coming up this week for options. Friday is a true expiration, which means the serial expiration. You know, listen, I'm going to use your word. It could tag an all time high. I'm not saying it will, but it could tag an all time high, which would be, you know, sort of outside the box. All right. Next question.
Well, let's get to how we play the straddle, right? With using this chart right here. So you wanna start, or you want me to start?
No, I want you to start because, like I said, I've been very, very leery. Okay.
Mhm.
Um,
Of the straddle. So the straddle is not the straddle is for me uh, like a line to put on a map, right? I'm just trying to map out the chart, and I use the straddle to do so. Now, if I think the market is going to stay within this straddle, what I like to do early on, and if I get a read, and I have a set list of things I'm looking for in the market, I'm looking for a mixtape. I'm looking for volatility that's not moving. I'm looking for what the market, if the market made a big move over the last 48 hours, usually the third and fourth day, the market likes to consolidate. So all these things go into whether I want to sell iron condors or not. And so my first, if all the ingredients are there, what I would do is start pricing in what are out of the money call spreads and what are out of the money put spreads below these red lines here, which are implied levels based on the current straddle, which is currently 38 points. So implied open on SPX is looking like 75.35. You add on a 35-point straddle, you're looking at 75.70. I like to give myself an additional 5 or 10 points of cushion. And I start with a 10-point spread. Well, the call spread side is paying you $1.50 on that. And on the put spread side, which would be like a 74.95, is paying you the same $1.50. So on a 10-point spread right at the open, you're getting paid $3 and taking $7 of risk to basically have a trade where you think the market is going to stay within these bands for today. Now, financials are down, right? It looks like if this is going to be a day where the market wants to go up, it looks like a Nasdaq day. So that's kind of how I start. Now, today I'm not selling that straddle. I'm not selling out of the money because I think it's going to get a little nutty today. I think both sides of these have a potential of getting tagged. What I would,
dude, you just said we're not going to have a rug pull. Now you're saying both sides are going to get tagged.
yeah, I don't think we're going to collapse, but I think both sides have a potential of getting tagged.
Listen,
That's different than a rug
trying.
pull.
Time out. Time out. We're trying to stick to 30 minutes, so we're done for today. Okay. I have about 5 or 7 more questions. So what I'm going to do is I'm going to transfer them to my AMA, which I do every Friday, and it gives me a chance for a very long time to answer a lot of questions. So if we don't get to all the questions on the day, we will answer them, you know, on the AMA, or we'll get to it tomorrow. But for right now,
You guys could
we're
write
gonna
him in too to the opportunistic trader.
go and we're going to wrap, okay? Because we're trying to stick to the half hour. I want to go basically through the opening. I don't care, but we're going to stick to the half hour. And so you're saying the straddle is a no go today? I don't know. I mean, to be honest, I'm more leery. I'm hoping it doesn't happen of some type of buy off the opening. Literally, we're going to finish, like if we finish here, we're going to finish Monday and Tuesday down on all markets with a very, very good reading in CPI and close to an all-time high and expiration. So those things are making me a little bit scared. So I'm hoping we chill. That's it. But I wish everyone a great day trading today. I know we're tight on time. We're trying to stick to this. I don't know. It's going to be hard, especially because we have literally 10 questions sitting here. But we'll get to everything. And I wish everyone a great trading day today. And we'll be back tomorrow. Peace. Enjoy.